The Eurozone is facing some serious challenges. Inflation is high, economic growth is slowing, and debt levels in some countries are raising concerns. But is this just a temporary rough patch? Or are we looking at a deeper crisis that could reshape Europe's financial future? Today, we're breaking down the key issues facing the Eurozone and what they could mean for the global economy. The European Union was built on the idea of economic stability, but right now, several factors are putting pressure on the system. Let's break it down. Although inflation has slowed compared to last year, the cost of living remains high in many countries. Food prices, energy costs, and rent continue to rise, making it harder for families to keep up. Some countries are seeing inflation rates above 5%, while others are struggling with wages not keeping pace with rising costs. Many European governments borrowed heavily during the pandemic to support businesses and workers. But now, with higher interest rates, repaying that debt is becoming more expensive. Italy, for example, has a debt level of over 140% of its GDP, one of the highest in the world. Other countries, including France and Spain, are also dealing with rising debt burdens. Germany, the largest economy in Europe, recently reported weaker than expected growth. This matters because Germany plays a major role in the Eurozone's overall stability. If its economy slows, other countries that rely on German exports and investments could feel the effects. So, does this mean the Eurozone is heading toward a full-blown crisis? Let's look at some indicators that economists are watching closely. Higher interest rates, combined with slow economic growth, are creating challenges for some European banks. While most financial institutions are stable, a few have shown signs of stress, leading to concerns about potential instability in the banking sector. While overall unemployment in the Eurozone is relatively low, some countries, particularly in southern Europe, are seeing job losses in key industries. If economic conditions worsen, this could become a bigger issue. Economic uncertainty often leads to political uncertainty. In some countries, there are increasing debates about economic policies, spending cuts, and how much control Brussels should have over national economies. While this isn't an immediate crisis, it's something that could affect long-term stability. So, what happens if these issues aren't addressed? Could the Eurozone face a financial crisis? Economists have different views on where the Eurozone is headed. Here are some possibilities. Some experts believe that while growth may slow, the Eurozone is strong enough to avoid a severe downturn. If inflation continues to decrease and energy prices stabilize, the economy could recover over the next year. Others warn that high debt levels, slow growth, and political challenges could lead to a longer period of weak economic performance. In this case, governments may need to introduce reforms or financial support programs to prevent a deeper crisis. While unlikely, some analysts worry that if multiple banks struggle, or if a country faces a severe debt crisis, there could be financial instability across Europe. This would require strong intervention from the European Central Bank and national governments to prevent further damage. So, what can be done to keep the Eurozone stable? Despite these challenges, the Eurozone has tools to manage the situation. Here's what policymakers are focusing on. The European Central Bank has been raising interest rates to reduce inflation, but it's a delicate balance. Raising rates too much could slow down economic growth, while doing too little could allow inflation to remain high. Some European countries are working on reducing their debt through spending reforms and economic growth initiatives. However, finding the right balance between supporting economic recovery and reducing debt remains a challenge. To prevent potential banking issues, European regulators are monitoring financial institutions closely and ensuring that banks have enough capital to handle economic shocks. So while there are challenges ahead, it's not all doom and gloom. The real question is, will European leaders take the right steps in time? The Eurozone is facing some real economic hurdles, but a full-blown crisis isn't inevitable. If inflation continues to ease, if governments manage their debt wisely, and if economic reforms are implemented, Europe could stabilize over time. However, if these issues aren't handled properly, we could see a prolonged period of slow growth, or worse, financial instability that affects the entire global economy. So what do you think? Will Europe's economy bounce back, or are we looking at a major financial shift? Let me know in the comments. And if you found this breakdown helpful, be sure to like, subscribe, and turn on notifications for more insights into global economics and politics. Thanks for watching, and I'll see you in the next one.